Look, okay, we finally have a U.S., real yield that's positive. How big a deal is this? Could it rip up the global markets?
Francine, firstly, real yield is actually the normal state of affairs.
We forget.
We've been in a very unusual world, and in that sense, I think this will allow capital markets over time to normalize, to price risk appropriately, and probably avoid bubbles. So I'm a child of the 70s, when I got my mind in the 70s, my economic mind, and in the 80s, which means I've seen what havoc indiscipline, particularly financial indiscipline, can impose on society. So I'm not too worried, but short term, this is going to lead to volatility, readjustment of asset portfolios.
Yeah, I was going to say, yesterday it was funny. I had a coffee actually with a pretty big person in the hedge fund world, and he was telling me about his thesis of inflation like 30 or 3 decades ago, and how interesting, because not a lot of people realize what it did in the 70s and 80s. What does it mean for where you see money coming out? Like, are you readjusting, some of your portfolios? And again, why did we not see this coming?
I think some of us saw it coming, but it's very difficult to fight market forces. When you get crowded markets, narrow markets, enforcing very different levels of valuation for what actually should be fairly similar cash flows, it's very difficult to fight the markets, and I think investment managers tend to live closer to markets rather than far away, because they simply don't have the luxury. They have withdrawal of assets. But we were all awaiting for this. We've been planning for this. I've been saying on the show actually for a long time, you want robust balance sheets, etc. You don't want excessive gearing, and that is now really playing out.
Yeah, so the tech stocks, what, you just dump?
Yes. No, I wouldn't just dump them. I would say tech, if you look at the last 10 years, we've had a very narrow tech leadership. But if you look at the last 5, 10 years, not just 3 and 1, tech has done exceptionally well against everything for structural reasons. But there's a point, as we saw in the Netflix case, where you actually say this growth can't be priced forever, and the market regains a certain sense of caution, which is what's happening right now.
So Netflix is more of a valuation problem. You don't see it as a business model problem.
It's a great business. It's a great
business, but are people migrating to Apple TV, or are they migrating to Amazon? Is it a crowded space?
It's the big animals, the big beasts starting to regain composure and taking back market share that they can take, and Netflix will have to live within that world.
Right.
Doesn't mean that Netflix isn't the leader, isn't going to be a winner for long run, but at the right price.
So you're telling me this is like a welcome correction?
I think if you do what we do, i.e. you professionally invest in markets, you use very tried and tested methods, one appreciates having a discount rate that is positive.
Right.
One appreciates risk being priced appropriately. But I think we're going to have political interference in markets for a while, which means you're not going to have an easy run, a very predictable market, because there are other things at play.
So what do you mean? This is what central bank policy, that they're
central banks behind the curve, a world that is moving from a unipolar to a multipolar world in a very messy way, which means the rules basis. What we see now in supply chain shortages is not just Ukraine. It started under the Trump regime, or Trump government, and you've had a ripping off of an order that has served humanity quite well for a long time, and the world is adjusting, and there is obviously pain points in that process.
And that's not priced in the market. So are you expecting more supply chain dislocations? And so if you're more nationalist, or at least if you change supply chains from parts of the world closer to home, it's automatically inflationary, isn't it?
Not necessarily, but it's costly. Look, inflation is sustained price pressure over time, not price shock. So, but that price shock can upset and can change behavior, which may lead to inflationary demands being built into an economy.
Inflationary costlier isn't the same thing, or is it relative?
Inflation is sustained price pressure over time, as opposed to single cost adjustments. Very important people remember that.
Yeah,
so that's the same point with oil now. Is oil going to stay where it is, or is there an energy transition coming? We don't know. That's the million-dollar question.
This is a key point. And actually, if the Fed starts normalizing, selling treasuries, like, who would buy them? If you're China, if you're Kazakhstan, if you're any other central bank, and you say, right, well, I could do something that at some point would make the Americans angry, why would I buy treasuries?
And who owns the growing reserves? Those are right now the oil producers or the energy producers. So We have an interdependent global financial system which we built after the Bretton Woods collapse in or the 73 change in the arrangements, and we need to understand that that served humanity well. If we are now going to overly weaponize the US dollar, there may be a period of not only instability, but a lack of capital where most needed. Now, the US, for example, as the anchor of the global economy at the moment, needs capital.
No.
It actually is
No.
significantly reliant on foreign bond purchases.
But are we underestimating the deep impact? I mean, I was looking back at some of the debates we did in Davos, and there was one 5 years ago looking at devaluation of currencies. I mean, that was so quaint because that was our only concern. Now there's like concerns coming at it from all sides.
Yeah. And I think, being no expert of crypto was a canary in the coal mine. There were people saying there is a problem down the line. And to me, what we need right now in the world, two things. We need political diplomacy. We have virtually none of that right now. We have screaming. And without that, you're not...
Whose job is that, though? The U.S.?
It is all sensible and civilized nations. And we need to... even people who are reprehensible should be spoken to, because otherwise the shooting continues, unless you're willing to wage war. Second point is we need financial diplomacy and leadership, and that has to come from the US and China to work out an order, because the more you threaten this weaponization, the more the withdrawal will be, and the more the implications for trade finance, for ordinary investment flows, and I don't think that is good for the world, period.
I mean, I was going to equip that, Emmanuel Macron was certainly on the phone with Vladimir Putin, we think, a number of times. But, I mean, this is all political and geopolitical, big thinking questions. As a market participants, do they think it doesn't touch them? And is that a wrong assumption?
I think it's... I mean, the markets have for a long time lived in a world of extreme political and structural stability, i.e. falling interest rates, falling inflation, benign economic and trade environment, and kind of unlearnt to be sensitive to that. I think we're in a phase now where we have to be extremely sensitive, and one of the things we've put into our next 10-year scenario planning now is the question of what does bigger state in market and in non-market economies mean to all of us. And I think we have to apply our minds and be very, very aware of the risks, as we've seen of late.
Okay, what does it mean? Market dislocations?
I think it means being very careful when you go to anything that is near political risk or priced to perfection. So, for example, treasuries were priced to perfection a year ago. They have lost about 7 or 8%. That is the low-risk asset, because we were assuming perfection, no rise in inflation, no change in the interest rate environment. It was just wrong.
So all of this, what does it mean for ESG? Is now that on the back burner because we're dealing with oil shocks?
ESG is front and center. And I can give you the 91 perspective. We still think the one thing we cannot forget is the sustainability challenge, and particularly the decarbonization challenge. And
that's your take, but the market is also aware of this?
Markets are all over, because some people are interpreting ESG as interference on every social issue. Some people are saying most countries in the world are not investable. Well, if that's the case, you're not going to have a better world.